not just the women's team lifting the India World Cup, but even the data points from the market seem to be quite strong, be it GST collections or for that matter, the auto sales numbers as well. All seems to be, pointing towards the fervor and demand finally coming back. You think the markets have digested it all?
Yeah, hi, good morning. Thanks, Aisha, for having me. See, overall, what we are seeing in the market is that after hitting the psychological levels of 26,000, markets are sort of consolidating at current levels. And with this, last month, we have seen a 4.5% kind of a gain. So some bit of a consolidation is not a really bad thing at current levels. Now, when you look at the overall numbers are coming out quite constructive. In fact, when you look at auto numbers, across the board, the numbers are pretty good. M&M continues to sort of do very well, best ever SUV sales. Maruti, the commentary is quite positive. And also when you sort of look at even other players like, say, Tata Motors again also sort of delivering a peak set of numbers at 61,000 odd units. And I think even when you look at some of the segments like, say, two-wheelers, not much was expected. I think overall, Eicher Motor came out with pretty good set of numbers. And even when you look at the tractor or the three-wheeler segment, so I think the overall sense is that post-GST, the demand momentum is still sort of sustaining. So we would want to believe that further better days are ahead in the market for a lot of sectors, including autos.
That surely is the case. But Pankaj, what about the banking piece? Because what we saw play out last week was that the private banking names were the ones which took a step back. Yes, the market is finding better a construct within the PSBs, but unfortunately, they don't carry that kind of weightage other than, of course, the largest play. What about PSBs, or rather the private sector banks, that is? Do you think they will kind of consolidate for some more time to come before they find some trigger to jump up?
So, Aisha, what we're clearly seeing in the market is sector rotation, which is a good thing to sort of happen. Earlier, the rally was driven by private banks, autos, and IT, and those have sort of paused for a breather. Whereas when you sort of look at metals, PSU banks, or oil and gas, they sort of continue to do well. So I think this kind of a sector rotation, again, is a lot more constructive because it lends more durability to the overall upturn in the market. And our sense is that once this sector churning will sort of keep continuing. And at this point in time, yes, PSU banks are looking a lot more better. I think numbers have been relatively good. PSUs experience typically lesser volatility on the margin front. And if the government sort of takes further more measures, further room for upside is definitely there in PSU banks. Not to say that private banks will not do well, but yes, at the moment, private banks and autos are sort of taking a breather for good.
Pankaj, can you give us a take on private banks, especially ICICI and HDFC? Because these are something which some of the banks which were a little softer last week.
So I can't talk about ICICI Bank, but when I sort of look at HDFC Bank, our sense is that the overall sense was that the second quarter, the margin decline was expected to be about 12 to 15 odd bips. The margin decline was about 8 odd bips. And I think going forward for HDFC Bank specifically, or even for other private sector banks, now it is expected that corporate lending is also expected to sort of pick up. On top of it, the retail, agri and MSME will sort of continue to do well. So what we're going to see is more of a broad-based growth coming up in private sector banks, I think, which is what will drive the next leg of rally in private banks. So we like most of the private banks. Banking in general is expected to do a lot more better.
Shriram Finance, where we saw some kind of traction coming back for PV and other loans, but MSME continues to be a stressful area for them.
So on the Shriram Finance, in fact, the overall sense was that CV was expected to sort of hit a rough patch from a NPA cycle perspective. But largely, numbers are not really sort of pointing towards that. So from that perspective, it's a relatively better set of numbers. And I think overall CV volumes also are sort of shaping up well. We continue to like even this stock as well, or in general, most of the NBFCs, because our sense is that the cost is expected to sort of come down. Even with the overall growth rate, when we sort of look at, our sense is that NBFCs are also even poised well. So BFSI in general is expected to do the heavy lifting the way it has done in the last month itself.
Okay, let's just pause for a bit and let's talk about some of the other newsmakers as well this Monday morning. And Ravinder is here with that list.
Well as on the order win, Titagarh Rail can be in focus, where company has received order of rupees 2,481 crore from MMRDA. NCC can be in focus on the back of their order win, where company has received new order worth rupees 710 crore in the October month. And Dredging Corporation of India can be in focus, where PM has announced rupees 4,000 crore modernization initiative for the company, and company has also entered into a 22 MOU with the 16 organizations worth rupees 17,645 crore. Cochin Shipyard can be in focus, where companies have signed LOI with Svitzer, Denmark to construct new generation of electric transversal trucks in India. And lastly, Zentech can be in focus, where company has secured a 289 crore MOD order for rapid anti-drone system upgrade. So back of this, Zentech can be in focus.
Thanks, Ravinder. Pankaj, can you also give us a take on some of the refining companies? BPCL saw good numbers, good gross refining margins, and especially inventory gains in line with other oil PSUs like IOC and HPCL.
I think refining margins have been better than what was anticipated last quarter, and I think refining margins or GRMs have further sort of gone up. And while yes, there could be some moderation in terms of the kind of crude what they would be buying, but our sense is that even Q3 is also expected to be pretty robust for some of these downstream companies. So I think valuation-wise, most of these companies are relatively attractive. And our sense is that even on the LPG under recovery side, overall with the kind of pricing on the declining trend for propane and butane, I think things are quite good for the entire refining as a segment.
Pankaj, stay with it a week and you'll have the weekly expiry as well play out. But that said, the GIFT 50 once again is indicating a weak start for us, or rather, a little bit of a soft start for us after what turned out to be a soft week and a weakish Thursday, Friday that we left off from last week. So let me welcome on board Chandan Taparia as well and find out what he's making of the market structure right now. Chandan, hi, morning. Great to have you on the show. A weakish Thursday, Friday, Chandan. The minute we hit that 26,200 mark, we've been hitting that resistance and we've been cooling off from there. How long do you think this cool off or consolidation in the index is going to sustain?
Good morning. Thanks for having me. First of all, congrats to all. What a proud moment for India. So talking about market, yes, we have seen a corrective move of around 400 points from recent high of 26,100. However, we need to keep in mind that major trend of the market is positive, but some profit booking is happening from last two trading session, and index started to form lower top, lower bottom with negative crossover on most of the mechanical indicators. However, the bank nifty is still stable, but most of the data set up on the nifty side are indicating slightly bearish undertone. In fact, the put call ratio fell. FIs are continuously selling. They sold to the tune of more than 6,500 crore. FIs long short ratio again declined from 25 to 16%. VIX is near 12 marks. So because of that, I believe the key level could be retested market to commence the next leg of rally. So as of now, till it holds below 25,850, 25,900, index can revisit the key support of 25,550. So looking for a decline towards 25,550, 25,500. Talking about bank nifty index, comparatively holding, but yes, also some lower top, lower bottom is visible on the lower time frame chart. Major support is visible near 57,000 to 57,250. It might see a decline of 500, 700 points, but near to those zone, bank nifty has potential to again restart the next leg of rally. So I believe we need to go on light mode to look for some bargain buying after the small decline for next 1 or 2 days. One more indicator we need to keep in mind. that rupee is depreciating. The market made the bottom with the top of the USD INR. But the way again USD witnessed some recovery, market might see some corrective or consolidative phase over the next few days before starting the next bullish leg in the market.
Chandan, can you also take us through some of the defense stocks, BEL, HAL, BL, coming up with good set of numbers, and the committee has also been good for BL.
Yeah, so quite positive on the selective defense name, and in fact, BL is in our top Diwali Muhurat peak as a technical call, and we believe the stock has potential to rally by 15 to 20% on the positional point of view. But talking about on immediate basis, the way it has taken support at its 50 exponential moving average with significant surge in the trading volume, momentum could be there. In fact, this is one of the strongest counter which is heading towards its lifetime high territory, and I think lifetime high is 436 and it can head towards those zones. So I believe momentum could continue with support of 415. BL can be bought for an upside target towards 444. If someone is looking for positional point of view, I believe 500 could be the reasonable target for the counter.
I want to talk about the auto space in specific. I mean, look at Maruti. They've recorded the highest ever monthly sales led by domestic growth. We've heard the management commentary post the earnings as well, which my colleague was just highlighting from the conference call. For M&M, the October sales have come in line with the estimates. All the segments have seen a double-digit growth. Tata Motors, the biggest outperformer amongst the four-wheeler companies. The passenger vehicle sales have seen an uptick of solid 27%. TVS Motors, inline set of sales numbers led by motorcycles as well as exports. For Eicher Motors, that's Royal Enfield in particular, the sales are largely in line, and it's been a very, very healthy growth that they've seen so far already in the festive season. So most of these auto names are going to be active. For Ashok Leyland, by the way, it's been a big beat to expectations. They've seen all-round healthy growth this time around in the quarter gone by. But Pankaj, what's your pecking order when it comes to autos? The erstwhile M&M now seems to be getting a tough competition from Maruti in terms of stock market pecking order.
So, in terms of pecking order, Aisha, I think M&M continues to sort of do very well. So that is our top pick in that segment, because not only the UV segment is doing well for them. In fact, the tractor segment is also sort of doing very well for them. So that remains the top pick. Besides that, I think between Maruti and Hyundai, we have been giving higher multiple to Hyundai, largely because of the better SUV portfolio, while Maruti is expected to do some bit of a catch up. But I think Hyundai has a better lineup, so which is where we are slightly more positive there. And I think in the CV side, Ashok Leyland has been a sort of a positive surprise. So I think that looks better. And within two-wheelers, what we like is Eicher Motors. I think they've been clocking more than 1 lakh kind of a unit. It is one of the best places to sort of look at the premiumization side. And obviously, CV also sort of helps them. So in two-wheelers, it is Eicher is what we like.
Now, you also said that the leadership for autos, or rather, M&M got challenged by Maruti. Is Maruti still the strongest name, or would you believe, something that Pankaj was saying, that Hyundai perhaps has a good lineup? Is that showing on the charts, right?
Yeah, Hyundai is showing charts. The recovery for Hyundai in the last 3 months has been very strong, very robust, and very sturdy. But then I think Maruti is a different, in a different league altogether, because the stock in the last 2-3 years has been a huge underperformer. And I think in this kind of a phase, there comes a point where the stock tries to catch up, with the leaders from the sector and tries to cover up the underperformance. And that phase has now started off for Maruti. That's why you see the stark difference in the last 2-3 months, where in one hand M&M is just struggling around the 3,200 kind of a zone. Maruti has moved up almost 5,000 points from 11,000 levels to now 16,000 plus mark. So that tells you that the stock is getting ready for a zone of a strong leadership outperformance, and that should boost the entire sector at large as such. And it's a healthy mix of consolidation or churn which happens within sectors, because when you're too much dependent on one or two major stocks to outperform from the entire sector, and the other stocks continue to underperform, eventually the weight of the price movement on the larger cap names or the leadership stocks eventually goes into a drag. So I think now this could be a refreshing change for the entire auto stocks, and that's why you're seeing in the last 2-3 months, more or less the auto trend has been a lot more stable and strong, largely. So I believe that this leadership stance for Maruti should continue. The chart patterns are still very strong for the stock, and over the near to medium term, I would still see another 10 to 15% upside at least for the stock.
Chandan, come in here and give us a trend for some of the earnings that are expected today. Bharti, Tata Consumer, Titan, and Power Grid.
Yeah, so to start with Bharti, the major trend of the counter is positive. In fact, the stock really did well in last 4 to 5 weeks, really did well from 1850 to 2100 marks. However, in last 2 days, it witnessed a corrective move, but major trend is positive. I believe buy on decline could continue until it holds above 1980. I think decline could be bought for an upside target towards 2100 level. Talking about Tata Consumer, again, we need to keep in mind that the stock has been moving in a range from last 7 to 8 days, and momentum of the counter is slightly slow. However, the multiple hurdles are there on the monthly chart, but if those are surpassed, I believe next leg of rally cannot be ruled out in the counter. So as of now, 1190 could be the key hurdle. If Tata Consumer moves above 1190, then only fresh up move could be there. Otherwise, on the downside, 1120 could act as a major support.
Right, okay, that's the word coming in on some of the earnings contenders. But Pankaj, what's been your reading of the earnings so far? Anywhere you think that earnings would or could catch up in the next quarter? And what positively surprised for you so far?
So up till now, Aisha, I think what we have been very positively surprised by the chemical segment, especially the R32 gas segment, so where we have seen most of the players coming out with a good set of numbers. Our sense is that overall fluorochemicals as a segment is expected to do very well. I think we have seen the companies coming out with pretty aggressive capacity expansion. So Naveen Fluorine, despite the run-up, still looks very attractive to us. In addition to that, SRF and Gujarat Fluoro is something where we expect things to be a lot more better, because the kind of expansion what Naveen has announced, and also the kind of capacity which SRF and Gujarat Fluoro are carrying, our sense is that this segment can sort of do very well. And pricing-wise, the R32 gas prices are at elevated levels and is expected to remain elevated, given the fact that a lot of developed economies will be losing their quota. So from that perspective, I think this segment within chemicals is expected to sort of play out very well.
You know, Pankaj, we were just chatting with Kunal about the reading on the charts of BEL and whether that's now rubbing off on the rest of the sector constituents or not. What is your own take on defense, and what kind of runway do you think defense pack has, say, in the next 6 months?
So I said defense has already sort of done well relative to the market in the last 1 or 2 years. So none of them are sort of cheap. But yes, what we like is, again, PSU names like, say, Bharat Electronics, because Bharat Electronics, the share of electronics is expected to sort of keep going up. And this is one of the few companies which have delivered a very steady set of performance, unlike shipbuilders where you see volatility on a quarter-on-quarter basis. So I think HAL and Bharat Electronics look good to us. In the private side, what we like is data pattern. That is one of our picks. In the Maruti side, this company has got a fairly good share coming from radars. And our sense is that radar is not only going to be used in the Air Force, it has wide implications or wide usage across other platforms as well. So data patterns is another. So defense, one needs to be very constructive. I think overall sense is that this is one of those huge sectors which will continue to sort of deliver high teen kind of a growth. As for any major weakness, is an opportunity to buy.
Okay, so that's on that. But Pankaj, your take on what we can expect from Titan particularly, and other than that, some jewelry companies' numbers this time, given the kind of fluctuation we've seen in gold prices. Where do you believe Titan could stand today when its earnings come out?
So on the Titan front, our sense is that pre-performance, if we look at the business update was quite strong. So we are expecting about 18% kind of a growth in consolidated revenues to somewhere about 16,000 odd crores, because jewelry business is going to grow at 18 odd percent, CaratLane 30%. The watches and the eyewear segment is expected to witness a relatively softer quarter. So overall, we could see some bit of a margin improvement, but our sense is that the next 45 days are also quite crucial because gold prices have softened a bit, and you'll have the marriage season beginning in this month and lasting till mid of December. So I think cooling off gold prices is pretty constructive for Titan, and if the demand sustains in this next 45 days, I think Titan has the potential to do relatively better compared to a lot of other consumption categories.
That's the take coming in on Titan. Pankaj, on that note, we'll let you go. Thanks as always for your time. Lots of earnings which are going to be on focus, and of course, a lot of monthly sales numbers as well. We've been flagging off Tata Motors, M&M, Maruti Suzuki. Look out for what's going to happen in the oil and gas pack. The oil-related stocks, given the fact that oil has now risen for a fifth or rather fourth day actually, and now we're above that $65 per barrel mark. OPEC Plus has paused the hikes for the Jan to March quarter. That entire pack is going to be in focus. And BPCL, of course, wherein the refining business has been robust after their earnings came by, and the marketing weakness offset by inventory gains is what they've seen in the quarter gone by in terms of their numbers. NCC, Dredging Corp, Cochin Shipyard, Zentech, most of them have seen order wins, as is the case with Titagarh as well, and a sizable 2,481 crore rupee order from MMRDA is what Titagarh has actually won. So look out for what that stock as well does in trade. And of course, like we've been flagging off the entire Motown pack in any case. Private banks, they seem to be the niggling worry, as Kunal was earlier highlighting. But Chandan, what is your own sense in the reading on a Kotak, IndusInd, ICICI Bank as well as HDFC Bank, and whether they can participate in the fervor that one is seeing right now in the PSU banks?
Yes, so talking about Bank Nifty, the good part is Bank Nifty is comparatively holding well. And if I need to compare with a counter like Kotak, ICICI Bank or IndusInd Bank, then probably I'll go with the counter like IndusInd Bank. Because ICICI Bank has been making lower top, lower bottom. In fact, last week it witnessed a corrective move, and now small follow-up could break it down the downside. Even Kotak is also forming a negative price pattern. So I'll focus on IndusInd Bank in the private space. As of now, it has major support near 770. Buy on decline can be applied with support of 770 for an upside target towards 820, 830 levels. One mid-cap bank that will be IDFC First, that is likely to be in focus. In fact, on the weekly chart, it has been making higher top, higher bottom. It surpasses falling supply trend line on the monthly chart. In fact, the rounding formation is clearly visible and has been making higher top, higher bottom. Even on the Friday, when the entire market was witnessing profit booking decline, this stock was firmly holding well. So I believe with support of 79, IDFC First Bank has potential to rally towards 85 to 86 kind of level. So yes, IDFC First and IndusInd Bank could be two preferred names, and positive stance and counter like SBI and Indian Bank will be there from the PSU space as well.
That's your take on banks, but that time of the show where we get you some mid-cap ideas from our technical experts. Kunal, you go first. What's looking good from the mid-cap end?
So not really a mid-cap, but then BSC is something which looks attractive. In fact, the stock on Friday